Welcome to The Explainer. Today, we're diving into Standard Aero, a real high-stakes bet in the aerospace world.
So, since the IPO, the big question is simple. Does the growth potential justify all the risk?
You gotta know, they're an MRO. That's the essential service that literally keeps planes safely in the sky.
All right, let's start with the bull case. Why are some investors so incredibly optimistic about this company?
First up, sales growth. 16% year over year. That's a huge sign of market demand rebounding. And get this, quarterly earnings per share jumped over 1,100%. That is some serious momentum.
So yeah, the past PE looks high, but bulls say, look forward. That future number is way more reasonable.
Plus, they've locked in deals for the new LEAP engines. We're talking decades of guaranteed revenue here.
Okay, but it's not all clear skies. Let's flip it and look at the bear case now. The problem? Their profit margin is razor thin, just over 2%. There is zero room for error.
And then there's the debt. That 1-to-1 ratio, it's a heavy burden from its private equity days.
So what do these numbers mean? Well, they suggest the company is struggling to turn investment into actual profit. Think about it. An ROIC of 2.65%? For every dollar put in, they get back just over 2 cents.
And bears point to real-world hurdles, supply chains, new program costs, and rising expenses. It's a lot.
Then there's the private equity angle. You have to ask, who is selling, and more importantly, why?
Insiders have been selling, a negative 18% net transaction rate. That can be a major red flag.
But big institutions are still in, and insiders, even after selling, still own a huge chunk of the company.
Bulls argue this is just a standard PE exit. They're selling to pay down that debt. Smart, right?
Another point for the bulls, diversification. They're not just commercial. They have stable defense contracts too.
But even that isn't totally risk-free. Look at the V-22 Osprey grounding. That created some real volatility.
So here's the core conflict: a fantastic growth story versus some really risky present-day financials.
Which leaves us with the ultimate question. Can that future potential actually overcome its heavy financial past?